Welcome back. Well, as promised, let's get to the conversation around a new IPO, another company coming to the street. Jain Resource Recycling is coming out with an issue, which is about 1,250 crore rupees. The IPO is opening out for subscriptions today. Kamlesh Jain, Chairman and Managing Director at Jain Resource Recycling, is with us. Mr. Jain, thanks for joining in. So we want to, of course, understand the company a little better, and we have three key talking points. Let me lay them out for our viewers. Of course, we want to understand the purpose behind the fundraising capacity, the fundraising activity, your current capacity utilization and the scalability of the business, and of course, what you see ahead for your margins. So let me start by telling our viewers that this IPO is a mix of an OFS as well as a fresh issue. The offer for sale component is slightly larger at 750 crores. Fresh issue is 500 crores. That's the money going towards the company. So tell us, sir, this 500 crores, what's the utilization? Why did you feel the need to come to the market?
So good morning. So we, out of this 500 crores utilization, we are going around 375 crores will be paying to clear our debts, and around 125 crores will be general purpose in the company.
Okay. So, all right, got that. So you will be paring down some debt. Let's also focus on what the company does. And Nigel has been explaining this to us. So basically, you are into the recycling segment in the non-ferrous space. So tell us what your further expansion plans are. I know you can't give very specific numbers, but what is your current capacity utilization? How are you planning to scale up the business? Do you have some clear capex plans ahead?
Yeah, so we have current capacity around 3 lakh tons of non-ferrous metals recycling, out of which I feel we'll be utilizing around 70 to 75% capacity utilization. And we have expansion plan for copper product, mainly for copper cathodes, copper wire rods, and bus bar, and other value chain. So the expansion will be the money come from expansion will be internal accruals only, and the balance 500 crores which I explained for going for in the company. Company is going to,
Okay, got that, sir. Good to have you on the show, Mr. Jain. This is Nigel on this side. Quick couple of questions then. You said 375 crores will be the debt reduction. So assuming that interest cost will get saved will be roughly around 40 crores, 35 to 40 crores. That would be a fair assumption, right?
Yeah, approximately you're right, around that percent for the bank CCLP, they're going to reduce it. So we'll save the 40 crores.
And post this repayment, what will the debt number come down to?
What was the question?
Post the repayment of 375 crores, what does the net debt come down to?
The net debt compound to will be around 500 crores.
It will come down to 500 crores. So currently you're saying it's around 875 crores. Post this repayment, it comes down to 500 crores. You got that, right?
Yes.
Okay. All right. Tell us how the revenue mix will look. As you're saying, the focus is going to be on copper for further expansion from here on. Currently, it's broken up into lead, copper, as well as aluminium. So what is the ideal revenue mix you're looking at? And also in terms of capacity from 3 lakh tons, if I got that number correct, where is that number headed, say in the next 2 years?
So out of the revenue mix, you're saying we are majorly doing copper, which is around 45 to 50% around copper. And the balance is around 40% lead, and rest is aluminum and plastic. And our focus, of course, on expansion of the copper. And in the future, we'll be expanding more in copper, which I have explained to you. And the revenue will be going up more for copper. And I think it will reach to 60% of total revenue will be copper.
Brilliant. All right. So we got that in place as well. Could you tell us what is your target in terms of market share? We have some brief numbers for every segment, but you must be having some target in mind. So if you could help us out with that number. And since we're talking about your revenue mix, exports have been gradually going up. What is the targeted domestic export mix you're looking at?
So we are looking around 60% exports. What is the last year performance we have? So we are planning to go more for export side, of course. And domestic market is growing as India is growing very fast. So we also have a lot of requirement of copper and other metals in domestic market also. And my focus more will be on to grow the export, because we are sitting in a port which is in Southeast Asia, and the freight is very negligible to all those countries. We export to Japan, Korea, Singapore, China, and many other countries in Southeast Asia. And the freight to these countries are very marginal from Chennai port. That gives a cost advantage to us for exporting more material than selling domestically.
Mr. Jain, good to have you with us here and good luck with the IPO. Just a quick word, FY25 over 24, there seems to be dramatic improvement in numbers. Revenues are up 60%.
Yes, you're right. So what happened in our business of recycling, we have to source more and more. Sourcing is the key point in our business of recycling. We can sell as much as possible. There's a thing called order book here. It's only purchase book. So our sourcing gone up in last 2 years because of the global sourcing, and we have increased the team network in many parts of the Western countries, mainly US and other part of the South America. And because of this, a lot of the cultural shift and the technological changes and the technological disturbance, a lot of products become dismantled, and that's why our sourcing is going more and more up. And we already have enough capacity. We always keep 20% capacity spare to get more raw material. That is why the revenue is going up, because of the more sourcing of raw material.
So just a quick question. Capacity is around 140,000 right now?
No, it's around 3 lakh ton total for including lead, copper, aluminium, including everything. And we are utilizing around 75%.
Okay, all right. Okay. Got that out of the way then. Are margins better in exports compared to the domestic business? And also, we have got a listed peer, which is Gravita. They are doing relatively better margins, though I think in size you are a little bit bigger. So do you have levers in place to improve your margins from here on?
Yeah, so in the business of recycling, it is about scale. So when you more and higher the scale, lower the cost of production and better EBITDA margin. That is the simple funda of this business. So we have to do more and more sales and increase our production. Now, of course, the peers, the Gravita is not exactly like us. We are 60% in copper and around 30-40% lead. So we are alike to a certain portion, but not 100%. And export margins are better because of the low freight, and it depends on the prices of the LME. So wherever the demand, we sell our product wherever the net landed price to us. And we compare that. Based on that, we sell our finished goods to the domestic market or export market.
Okay, all right. So part of this is also an OFS. Do the promoters have any kind of plans to infuse some more money back into the company since business prospects are looking so good?
If company requires, we definitely pump the money more. But I don't think company required the cash because they got enough cash to grow. Okay. And right now the internal accruals are very high. So I don't think company will be requiring extra cash in the business.
Okay, all right. Just a thought, sir. Since there is some money that's going back to the promoter entity and some part of it is going into the company as well. We appreciate you joining in, sir. Debt is going to be coming down drastically. You're sounding optimistic about business. And as you said, the focus is going to be on the copper part of the business from here on. As volumes and value picks up in terms of sales, the margins will improve. We look forward to speaking to you, sir, on listing as well.
Thank you, sir. Thank you very much.